Check out shares of McDonald's and Chipotle. MCD continuing to trade near all-time highs, while Chipotle trades at levels we haven't seen since December 2021. Evercore raising estimates on both names this morning, also initiating Starbucks with a tactical outperform. And joining us now is Evercore analyst David Palmer. David, it's great to see you. So you're saying that valuations can run further higher from here?
In some cases, there's a lot of full multiples out there in restaurants, and so you're going to need to see sales beats and some earnings upside. You're going to probably see a little bit more of that in the company-owned names, the Starbucks and the Chipotles. But McDonald's is poised to grind higher as well. Their sales are great. That's going to come through in the first quarter. Names like Yum Brands, they might have to wait a little bit to get more of that sales relief and earnings upside. But the global is good again, and it's good to have some of this cost coming down for some of the company-operated names.
I was just going to say, if there's a macro takeaway to your calls and just the bullish action in these stocks, is it that they're recession-proof because people trade down and they eat fast food during recession, or is it a disinflation play because these restaurants have been hit so hard with inflation from labor to food?
No, there's a lot of the themes you just said there that are true. When it comes to the fast casual names, the Starbucks and the Chipotles, it's good that they are exposed to a little bit of a higher income consumer, while also being trade down within that consumer's diet pattern. In the case of the global side of things, it was going to be bad to be in Europe for McDonald's, for example, and of course China's turning, so the global side of things feels a little bit better today as well. But from a standpoint of food costs and some of the unkinking of the labor shortages and labor productivity initiatives, having that as a tailwind as well is going to be a good thing for a Chipotle and Starbucks, in addition to the food costs. So, that you're going to get this stickier top line with a little bit of bottom line relief in names like Starbucks and Chipotle.
Hey, David, on the China part, what percentage of the bull thesis is China? And, we've talked a lot about how they've sanctioned some defense companies and they're investigating Micron. Is there just a clean slate of no danger at all that they would lean on consumer brands as well?
Yeah, with Starbucks and Yum have significant China businesses. And in the case of Starbucks, it could easily be 6 or 7 points of profit tailwind over the next 18 to 24 months. As they recover in their margins and their sales. There's concerns out there, including what you mentioned about some sort of brand backlash and country risk. In addition to that, there's competitive risk, and there's a lot of new China coffee offerings. Howard Schultz was successful in igniting the crave for coffee in that country. But the first things first, the traffic is out there. You can see it in China rail data, that there is a full recovery that's really happened in March into April. And that's about a quarter ahead of schedule. And that's one of the reasons why we made Starbucks a tactical outperform for this quarter.
David, thank you very much for joining us.